Welcome everybody to our presentation today. We're going to be talking about accounting for leasing under ASC 842. If you have any questions during the webinar, certainly feel free to type them into the question box in the GoToWebinar screen, and I will try to address those either during the call or toward the end. My name is Neil McDonald. I am a certified management accountant, a certified professional accountant working for Binary Stream Software. Been in the industry with Dynamics GP for about 15 years now. I will say up front though, I am not a leasing expert, so we're going to go through this session today, and I do want to put a disclaimer out which I'll share with you in just a moment. Our agenda today, first of all, we want to look at why are we here? What are the objectives of this webinar? What do we hope to take away from this when we're done? What is ASC 842? And how does it apply if you are the lessee or the lessor? There's different rules for either of those categories. We're going to talk about some steps to help you prepare for ASC 842 adoption. And then we're going to talk about, in particular, how you can be 842 compliant with your leases if you're using Dynamics GP or even looking forward to Dynamics 365, which would be a combination of the AX Nav type products that are out there today. And we're going to focus toward the end of the call on Binary Stream's property management module that will help you with that. So as far as our objectives, we want to make sure that by the end of the call you understand what ASC 842 is, but not just understand it, but recognize if it applies to you. Are you a lessee? Are you a lessor? And if so, how does it apply to you? What are the changes coming that you need to watch out for? We're going to help you plan for ASC 842 adoption. We're going to look at actually what some of the experts are recommending, some of the major accounting firms. What do you need to know? What do you need to consider? And we're going to look at what these industry experts say that we need to look out for as well. And again, we're going to look at 842 in Dynamics GP with Binary Stream's property management. So as a disclaimer, as I mentioned earlier, I am a Canadian CMA CPA. I am not a lifelong expert in leasing. I'm also not your CPA. So I strongly recommend that you learn as much about ASC 842 as you can. Now, if you download the documentation for ASC 842, the guidance from FASB runs close to 200 very long, very detailed pages. It is not a quick read. It's something that you're going to want to review over and over again. You're going to want to study it. This webinar obviously cannot focus on all of the details of ASC 842. We're going to hit the highlights. We're not intending this to be comprehensive, and of course, as with any update from FASB or from IFRS, if you're on the international financial reporting side, it's not meant to be conclusive only because they continue to release updates. They're still taking comments from readers of the documentation today, and there may be some changes coming. So again, learn as much as you can about ASC 842. Look at various resources. Look at some accounting white papers, some articles, the relevant either IASB or IFRS topics, and discuss those with your own CPAs and your auditors to ensure that, number one, when it takes effect, you are compliant, and number two, you're compliant ongoing. Throughout the session today, I'm going to be referring to some documents that I have used to research this information. I have attended several webinars on ASC 842. I've read a lot of documents. In particular, I've got 4 of them listed here, plus obviously the topic 842 from FASB itself. But there's a great document from Grant Thornton that goes into a lot of information on the new accounting standard. We're going to look at some information from the PricewaterhouseCoopers document toward the end here as well. And then there is an executive accounting update for both lessees and lessors available from KPMG. These are available if you simply Google these, you can find them. They're great information and resources on ASC 42. They break it down into language that's understandable for the average layman as well as for the accountants they're listing as well. So ASC 842 is also known as ASU 2016-02. On the international side, it is IFRS 16. And what it is an updated accounting standard. It's replacing the existing lease standard, which is ASC 840. The IFRS document, IFRS 16, has been updated as well, but they are not identical. This gets tricky if you're a company that has to report under both FASB and IFRS standards, or US, Canadian GAAP, and in the international standards, because they are not identical, and it may require double sets of books for you to be able to report on both of those. Basically, it's changing lease accounting for both lessors and lessees. Lessees to a much greater degree. The key points: lessors are going to focus on control of the asset. That's how you determine the lease type. There's 3 types of leases for lessors to worry about. Most of the accounting, however, remains similar to today's standards, 840. On the lessee side, this is a big change. All leases longer than 12 months will appear on the balance sheet, whether they are what we call today a capital lease or an operating lease. All leases longer than 12 months must show on the balance sheet, and it will show with a right-of-use asset and a corresponding liability or an investment. Now, how do you know if you're affected by ASC 842? The topic itself actually says that topic 842 affects any entity that enters into a lease, with a few exceptions. So whether you are a lessor or a lessee, if your company leases real property, land, computers, photocopiers, vehicles, trademarks, anything that would show up on a lease document, whether you are the lessor leasing your property to somebody or a lessor leasing this property from somebody, ASC 842 applies to you if your leases are greater than 12 months. So the first thing we need to do under ASC 842 is identify what your leases are, what type they are, so we know how to account for them properly. Topic 842 defines a lease as a contract or part of a contract that conveys the right to use identified property, plant or equipment, an identified asset for a period of time in exchange for consideration. And it focuses a lot on control, that right to control the use of. And it says that control over the use of the asset means that the customer has both the right to obtain substantially all of the economic benefits from the asset and the right to direct the use of the asset. And those 2 things are key to determine, do I have a lease, and does this lease fall under ASC 842? In the FASB document, section 842-1055-1 contains this flowchart. If we walk through, we can see how to identify, do we have a lease? Notice that it does say, though, in the document that this flowchart does not include all of the guidance on identifying a lease. It is not intended as a substitute for the actual guidance itself. So don't just grab the flowchart, walk through it, and think you're done. There's a lot more information there. The flowchart is simply a guideline. So if we look at the start, we drop down, is there an identified asset? And it tells us where to find that out. If you can go in and look at the FASB documentations, it shows you exactly which paragraphs to read to determine if there is an identified asset. If you go through those sections and there is not an identified asset, your contract does not contain a lease. If it does, then you have to ask, does the customer have the right to obtain substantially all of the economic benefits from the use of the asset throughout the period of use? And again, it shows you which paragraphs in the documentation to read to determine the definitions of all of these phrases that it's throwing out there. And if you come to the conclusion, no, the customer doesn't have that right, you don't have a lease. If they do, then that goes down one step further. Is the right to direct the use of the asset provided by the customer or by the supplier? If it's the supplier, again, you don't have a lease. If it's the customer, then you do. If it's neither one, you keep going down. Does the customer have the right to operate the asset throughout the period without the supplier having the right to change those operating instructions? Again, it's either yes or no. If it's yes, then you do have a lease. If not, then you don't, or you keep going down. Does the customer design the asset in a way that predetermines how or for what purpose the asset will be used? If not, you don't have a lease. If yes, you do. So a very simple flow chart. You can walk through, read the relevant sections, and determine, does my contract contain a lease or not? Once we know that, we then have to distinguish the leases by classification. On the lessee side, we need to distinguish between an operating lease and a financing lease. That's the term that's given to what we currently call a capital lease. They call it a financing or a direct financing lease. On the lessor side, we need to distinguish between a sales type lease, a direct financing lease, and an operating lease. The key here is that since virtually all of these leases, regardless of the type, all leases will now appear on the balance sheet, they're going to affect the way that investors and financial statement users, maybe your financiers, view your business. It's also going to affect the revenue and expenses, how they show up initially as assets and liabilities, turning into revenue and expense when it hits the P&L. Under ASC 842, looking at the lessee side, a lease is a financing lease for a lessee and a sales type lease for a lessor if the lessee obtains effective control of the asset. Now, how do you determine effective control? What does that phrase mean? Again, ASC 842 defines it. If we look in section 25-2, it says that if any of these conditions are met, then this would be a financing lease for a lessee or a sales type lease for a lessor, if the lease transfers ownership of the asset to the lessee at the end of the lease. So you're going to lease it for a period of time. When the lease is over, you own the asset. It is then a financing lease for the lessee. The lease has a bargain purchase option, something with a $1 buyout or a very low dollar buyout would be considered there. The lease is for the major part of the remaining economic life of the asset. The present value of the lease payments plus any guaranteed residuals amounts to substantially all of the leased asset's fair value, or the asset is so specialized that it has no alternative lease or use to the lessor. If any of these conditions are met, then it is a financing lease for a lessee, a sales type lease for a lessor. Absent any of these, it's an operating lease for either party. Now there's a couple of phrases there that kind of ask questions. What does it mean when it says the remaining economic life of the asset, the major part of that, or substantially all of the asset's fair value? How do I determine what those are? Again, ASC 842 helps us out. It defines what those thresholds are. In section 55-2, it says that 75% or more is a major part of the asset's remaining economic life. So if you're leasing an asset that will take it out beyond 75% of its useful life, then that becomes, it's no longer an operating lease. If it's 90% or more of the asset's fair value, again, that would not be an operating lease, it would be a direct finance. If we go back, it talks about a finance lease for a lessee, a sales type lease for a lessor based on those thresholds. It does state, though, that if the asset is near the end of its economic life when the lease starts, and that's 25% or less, then these conditions don't necessarily apply and you may be able to book them a little bit differently. What about the rate that we use? And we're talking about a finance lease or a direct sales lease. There's an interest component. What interest rate do I use to compute those net present values? Well, it mentions that we should use the discount rate that is implicit in the lease. If there is not one, in that case you would use, in the lessee's case, the incremental borrowing rate. So let's go look at both the lessee side and the lessor side. Lessees first. So again, if a lease is less than 12 months and does not contain either a purchase option or a renewal option that is expected to be exercised, then it does not need to appear on the balance sheet. You can leave it as an operating lease, just like we do today under ASC 840. If, however, the lease extends beyond 12 months, it might be a 12-month lease with an additional 12-month renewal. If you expect that renewal to happen, then you must put the lease on the balance sheet. If it is simply a 12-month or less lease, it does not need to appear on the balance sheet. For all remaining leases, in other words, those that will appear on the balance sheet, you would create a right-of-use asset on the asset side of the balance sheet and a lease liability on the liability side. And both of the asset and the liability will be recognized at the present value of the remaining lease payments. It does state there that initial direct costs can also be capitalized as part of the right-of-use asset. And we're going to talk a little bit more about what qualifies as those direct costs. An operating lease, just like we do it today, the payments will be recognized as rental expense or lease expense on a straight line basis over the lease term. The same way we do it today, that part of it does not change. The finance lease will be different. Now we have the right-of-use asset, we have this liability. The expense for both the rental and the interest, because remember we're looking at net present value, so there's an interest component, will be recognized based on that interest rate calculation. The right-of-use asset will be amortized straight line over the shorter of its useful life or the lease term. Let's look at the lessor side. Again, there are three lease classifications for the lessor. A sales type lease is a lease where the control of the asset is deemed to have transferred to the lessee. In a sales type lease, the lessor will de-recognize the asset. They will recognize the net investment in the lease and recognize profit or loss based on that. Now, this assumes collectability. If collectability is not probable, then you don't have to go through these steps. But if it is, then you would have to de-recognize the asset, recognize the net investment. If the asset's fair value is different than its carrying amount at lease commencement, then you'd expense any direct costs at lease commencement, otherwise defer them by including them in the net investment itself. And of course, the interest side of it would be recognized using the interest method. In a direct financing lease, we have to look at two qualifications to determine, is it a direct financing lease? If the present value of the lease payments plus the guaranteed residuals equals substantially all of the asset's fair value, and collectability of all the lease payments and the residual are certain, then we can look at this as a direct financing lease. And again, we're going to de-recognize the lease asset and recognize an investment in the lease plus any losses incurred. A gain from de-recognizing the asset is deferred over the life of the lease. Direct costs are included in the investment in the lease as well. After the commencement of the lease, recognize interest using the interest method. So a lot of similarity between the sales type and the direct financing lease. There are sections in ASC 842 that will help you determine, where do my leases fit in? Are they a sales type lease? Are they a direct financing lease? The third one for lessor accounting is the operating lease. And this is treated exactly the same way we do it today. There is no balance sheet treatment for an operating lease for a lessor. Same way we handle it under ASC 840. You recognize the lease income on a straight line basis over the life of the lease. Direct costs would be deferred and recognized as an expense over the lease term on the same basis as the income so that they match. Let's talk about the lease and non-lease components and the direct costs. There are changes from 840 to 842. This will affect both lessees and lessors. Again, let's look at the lessee side first. Lessees will need to evaluate any services that are part of the lease and allocate an amount of consideration to each component. And it gives an example in the 842 documentation. It says, for example, a lease might contain property taxes and maintenance, common area maintenance. By themselves, those taxes have no identifiable benefit to the lessee. The lessee will not obtain those taxes without the lease. So that would be included as part of that asset. It's in fact part of it. It belongs to that asset. The CAM, on the other hand, is a separately identifiable benefit. You can go get that somewhere else, that maintenance part. You would not include that as part of the right-of-use asset. Instead, you would base the value of that piece, in fact, any non-lease components, on their relative standalone prices. And if you have a hard time determining what those are, maybe we have to go back and ask the lessor. If he can't tell you, then we have to use market values, that kind of thing, to determine what would the value be, the standalone selling price of that extra service be, and allocate price to it based on that. Now, there are throughout ASC 842 several practical expedients that allow by asset class for those lease and non-lease components to be accounted for together. There is a possibility to do that. Where we have to be careful, though, is it's going to increase the amounts on the balance sheet, both on the asset side and the liability side, which might change some of your financial ratios. Now, there has been a basis for conclusions that has been issued since 842 came out, and one of the paragraphs in that does state that operating lease liabilities are operating liabilities, not debt. So those amounts may not affect some financial ratios, especially those that are used in debt covenants. So be careful of that. You want to watch, what are we putting on the balance sheet? Should we be expensing some of it over time? Should we be putting it on the balance sheet, or should we not? There's some work that needs to be done there to determine the proper handling of that. On the lessor side, again, the same thing. We need to evaluate the services and allocate consideration to each component. And again, it talks about a lease that may have property taxes and CAM. Again, the taxes have no identifiable benefit to the lessee, therefore they're part of the lease entries, part of that investment. The CAM is a separately identifiable benefit, so it is not. In the case of the lessor side, because this is revenue, it now falls under the guidance of ASC 606, revenue from contracts with customers, which is the new standard that has just come out for revenue recognition. ASC 842 also changes what we can take as initial direct costs. It changes the definition. And I've cited the section here, it's 30-10. It says that costs to negotiate or arrange a lease that would have been incurred regardless of whether the lease was obtained, such as fixed expenses for employee salaries, are not initial direct costs. It gives an example in paragraphs 9 and paragraphs 10 of what can and can't be included. So things like commissions based on that lease, payments made to an existing tenant to get them to terminate their lease, those are costs that are allowed. Costs that are not, things like overhead, depreciation, occupancy, equipment costs, advertising, soliciting for potential tenants, servicing existing leases, obtaining tax or legal advice, those types of costs, costs that would be incurred whether the lease was obtained or not, are not allowed to be included in the initial direct costs. Obviously, expensing these could result in higher expense recognition prior to the lease and higher margins on the lease income. Just something to be aware of. Let's talk about the timing of the transition. When does ASC 842 take effect? How do I get there? ASC 842 for public companies and not-for-profits is effective for fiscal periods beginning after December 15th, 2018. So unless you've got a late December year end, basically you're looking at a January 1, 2019 start. For private companies, they allow one extra year to adopt. Now, early adoption is permitted, and in fact, it might make sense to do so. We're going to be considering this a little bit more as we go through this section. If you are just a lessor, some of the changes are very few. Maybe early adoption or even running both standards simultaneously makes sense. You can get ahead of the curve when it comes to that transition, because both the lessors and the lessees are required to report in a modified retrospective transition. What that basically means is an adjustment in your financial statements, not a refiling, just an adjustment in the display of those going back 2 years. So you would have to look at any leases that exist at the beginning of the earliest comparative period. So let's say you adopt on time, this would be 2019. So your January 1, 2019. Any leases that are in effect as of January 1st, 2019, you would have to restate to show what would they have looked like had I adopted in 2018 and 2017. You have to do that retrospective comparison. Any leases that have expired before that date, you can leave them out. You don't have to worry about adjusting all of 2017 and all of 2018. Only leases are in effect when you adopt ASC 842, but you must do that going back 2 years. For some firms, depending upon the extent of your lease activity, it could be difficult. It could be time-consuming. What is nice, though, is that there are a lot of examples in the ASC 842 documentation. Paragraphs 243 through 254 give numerous examples for both lessors and lessees, how to adopt, how to restate, what should I show, what should I not show. And then there's also several pages covering the practical expedients. How can I make this a little easier if the bulk of my business is leasing? So what do the experts recommend? I talked about some of the big accounting firms earlier, some of the documentation that I've been researching from Grant Thornton, PwC, KPMG. Let's take a look. Because we have two changes to accounting coming so quickly one after the other, ASC 8606, of course, is hitting next year, revenue from contracts with customers, unless you're an early adopter. ASC 842 just a year later. Because they're so close together, and there's an obvious link there for lessors. We talked about that earlier, where under certain circumstances the lessor has to comply with 606 as well. How do you manage adopting both? The PricewaterhouseCoopers document that I referred to earlier suggests that you consider a few things. For example, because the standards are so closely aligned, does it make sense in your business to adopt both concurrently? So that would mean early adoption of 842, since 606 is applicable 1 year earlier. But in order to do that, do you have your systems in place? Are all your controls in place? Are you able to do early adoption? If you're looking at this thinking, hey, that makes sense, you've only got 10.5 months left before this hits. So are you ready to go? Are your systems and controls ready for early adoption? What are your peers and your competitors doing? If you look at other people in your market space, if you need to have comparative financials to them, are they adopting early or are they not? You don't want to be the only one to not adopt early, the only one to do it, if there's going to be a difference in investors or financiers looking at your financial statements and seeing a difference there. What do your investors prefer? Would they rather you take the hit once and do 606 and 842 all at once, applicable January 1st, 2018, or would they rather you do 606 in 2018, 842 in 2019? What about the interest rate environment? You think about adopting 842 and using present values based on interest rates. Today's interest rates are very low. What will they be in 2019? I wish I knew. So do you adopt now using today's interest rates, or do you wait and use 2019's? Maybe that makes more sense for your business. The expedients allow you to hold off on certain leases and lease classes until there's a requirement to restructure them or to actually change them. Should you wait until that time and restructure years down the road, or should you do it now when you adopt initially? Do you have to require, or do you have to report under both GAAP and IFRS, or just one? The standards are not identical, so make sure that you're researching the one that you have to adopt to. If you have to report under both as a multinational company, make sure that you understand what the differences are. As you're asking yourself these questions, there's no right or wrong answer. So it's very personal to your business, to your accountants, to your auditors, to go through questions like this and determine what fits my business the best. That same document, if you want to research it on the PricewaterhouseCoopers site, it's called 10 Minutes on the New Lease Standard. It gives 6 steps to help you prepare, and I've cited them here. They say, first of all, get every resource on board. Now, this is a lease standard. You think, well, you know, that's going to affect my leasing people. Yes, but it's also going to affect your accounting people. Well, if systems and standards have to change, that's going to affect your IT folks. It's going to affect your tax people potentially. What about procurement? What about operations, treasury, investor relations? All of these resources in your company have to be on board. They have to understand what the changes are, not just for their department, but how they cascade across the rest of the organization. And ensure that as you're preparing that you budget not just the money to get going, but the resources as well. All of this effort, all of these changes do take time, they do cost money. Make sure that you get all those resources on board. I like the way they phrase this next one. PwC says to break into the filing cabinets. Inspect and understand the leases. Get those lease documents out and read through those. You need to understand the lease terms, the renewal options, the payment terms. How do these play out over the life of the lease? Are they guaranteed renewals or are they optional renewals? When you're looking at these, are these renewals that you expect that you will do, or do you expect that you won't? You have to understand this. Examine each lease, or at the very least, the class of leases. If you have multi-asset leases, then be prepared to identify and account for each component as a separate lease. And of course, understand what costs are lease versus non-lease elements. Make sure that you account for those properly. Assess the impact of doing this. Do the practical expedients make more sense? Is this something that you should do now, or should you hold off? Do the estimates on what the balance sheet is going to look like for those operating leases, in particular for the lessees, and evaluate your leasing strategies. Are you better to lease, or are you better to buy going forward? Should you lease long-term and continue with a bunch of short-term leases, or go with a bunch of long-term leases? Short-term leases with no automatic renewals, if they stay under 12 months, don't have to appear on the balance sheet. But does it make sense to rent certain assets 12 months at a time with no automatic renewals? It also suggests that you examine and understand the regulatory and tax implications. This comes back to who's going to be affected in your business. It's going to cascade across multiple departments and multiple companies, from a reporting standpoint to a tax implication standpoint as well. Managing the transition. Will your current systems handle it? Do you have the ability to manage those leases under 842 in your current system? Will they build those proper assets? Will they defer them properly, recognize them properly? Or do you need to redesign? Do you need to reinvest in a brand new system altogether? It does mention, of course, that testing and implementation take time. So start early. It's less than 2 years away. If you want to run a year of concurrent books to make sure that everything plays out properly, that means you've only got 10.5 months to get everything in place. So make sure that you manage it and plan it properly. And reassess the agreements. Plan to periodically reevaluate your lease terms. One of the things it does mention in there is that the ongoing compliance costs, because of the change, because of the need to reevaluate and reassess, are likely to be higher than they are today. So make sure that you budget for that as well. Now, how does this play out in Dynamics, whether it's Dynamics GP or Dynamics 365? How does it play out? How can you be sure that you are ASC 842 compliant? Well, if you are running leasing in a Dynamics ERP today, it's going to require either some massive complex Excel spreadsheets to be able to manage the lease payments and make sure you get everything in the right place. And of course, that requires then manual journal entries back to Dynamics GP and reconciliation of those spreadsheets ongoing. You could go with a third-party, non-integrated Property Lease solution. There are other solutions out there, and you can get those. They don't talk to Dynamics GP, or they've got some integrations that you have to manage. A lot of times they require manual journal entries to make sure that your general ledger is up to date, or those integrations require synchronization on a daily or a weekly basis, again, to make sure that your general ledger, your financial system, is up to date. And we're going to talk a little bit about an ISV solution, Binary Streams Property Management, that's available today in Dynamics GP and will be coming very soon. We're working on it now for Dynamics 365, which of course is, there's an AX component in the operations side of 365 and a financial side which is very similar to NAV today. So Binary Streams Property Management helps manage both lessor and lessee leases. So it doesn't matter which side of this equation you're on, property management from Binary Stream can help with your leases. It will build out and manage those complex lease escalations. The calculations are built in. There's no need to take the data out to Excel. If you have a lease with a 10-year term with a 5-year automatic renewal and a 5-year optional renewal and so on, we can build out the escalations over the life of that. If you require straight line recognition, we can build the escalation straight line, either over the life of the entire lease or over each individual term if they're not guaranteed renewals. Again, you don't have to do this in Excel and manually journal entry it back in. because it's fully integrated into your Dynamics GP ERP and in the future Dynamics 365. So your general ledger is literally as up to date as your last transaction. You create some leases, it's up to date. You create those assets, it's up to date. You run invoices, it's up to date. Your general ledger is always as up to date as your last transaction. We've actually just released a brand new interface. I'm going to show you a couple of screenshots here in a moment. And we've got a lot of future enhancement that makes it even easier to use. It's designed for multiple businesses, commercial, retail, residential. And this is not just property leases. We have customers that are using our application. We've got one that it's a server farm, a data center, and they're actually leasing to their customers the hard drive space in their server farms. We've got customers that are leasing tractor trailers, the trailers and the trucks themselves to various drivers from their various warehouses and so on. So it's not just meant for buildings. That was the initial use of it, but it can go across any business, especially with the recent change we've made where you can adjust the labels to fit your business as well. Some of the functionality includes automated CAM reconciliations. That's that common area maintenance charge and reconciliation that's very common in commercial and retail. It does sales-based or percent rent calculations, again, very common on the retail side. Meter-based recoveries for anybody who has sub-meters inside the power companies or the water companies' meters. We have both one-time and a mass import of miscellaneous charges. This is a piece that was designed for folks that run, for example, senior homes. We have a couple customers where they have maybe 350 seniors in your senior living center, and the rent that these people pay covers their bed, it covers their food, but they have a lot of one-time charges, different point of sale systems that pick up these one-time charges. For example, if they go and get their hair done or go for physiotherapy or take a bus ride to town, the nieces and nephews drop in and stay for lunch. These are all miscellaneous one-time charges that have to come from those separate point of sale systems and be brought into the leasing system so that they can be picked up and charged as part of that lease record. That mass import of miscellaneous charges manages that. We've just released a portal that simplifies viewing leases, viewing and paying invoices online. So your customers can simply log on, see their leases, and they can pay their lease invoices directly from the portal without having to actually log into Dynamics GP, without even having to mail you a check. They can handle that themselves. We're also going to be enhancing that to allow the tenants to report trouble tickets. So they can create a trouble ticket and report that in, and it'll automatically create a work order inside of Dynamics GP. That will be working through the GP Field Services module, or the Property Management Work Order module. Those two will talk to each other as well. From a reporting standpoint, we have a lot of built-in inquiries, some SSRS reports like rent rolls, lease validations, financial forecasts, vacancy reports, and so on. A lot more information available right on our website. The link is right there. Here's the new interface. What we've done is we've taken and added a lot of information to the main screen. It used to be that you had to do multiple drill downs to find some of the information. Now it's simply sitting right there, right on the main screen where you need it. All the lease information is right there at your fingertips. Here's an example of one of our reports, the Revenue and Expense Forecast Report. Again, this one's showing revenue. The expense one looks the same. It's color-coded. You can quickly look at this and you can see, what have I actually billed? That's the blue. What am I going to bill tomorrow, next month, next quarter, next year? That's showing in the orange. If we look across the bottom, we can see this total by lease, by the actual tenant. If they happen to have multiple leases, it would be rolled up by tenant. We can look at it at the entire building level, so I can see my charges and my future for across an entire building. If you're running our multi-entity manager, it will show you across the entire entity, and it will also show you multi-currency as well. So a lot of information on one report where you can get in one spot, you can see what your actuals are, you can see what your forecast is. The lease summary report lets you have one single screen where you can see everything you need to know about a lease. I can see my lease number. I can see the property. I can see who the tenant is. I can see, do I have any deposits on file? How much are they? Have I given any of the deposit back? What's remaining? What insurance is being carried on this particular property? It could be insurance that I'm carrying. It could be insurance I require my tenant to pay and provide proof of insurance to me. It's going to show on one screen. What are my terms? Do I have renewals? Do I have multi-escalations? Do I have automatic renewals? What is my lead time to inform a customer that an escalation is about to happen? What charges do I have on this particular unit? Not only the charges and the amount, but when is the next escalation? Kind of a mini rent roll as well. What is the annualized amount? What is my rate per square foot? Everything I need to know about the lease in one place. It's just a sample. We have others, inquiries, rent rolls, vacancy reports, and so on. On the customer portal, my customer initially can log in. It's a self-service portal where you give your customer access to it. It would have your logo here. We have the binary stream logo, but your company, you can call it whatever you want. It will be showing on there. When your customer logs in, they can see their Dynamics GP customer account. Of course, they can't change the customer ID or the name. That's inside of your GP. Those are locked. But if they need to update their phone number, need to update the contact information, they can see that. They can change it if you want them to, and they can save it there. And it will go back and update the record in Dynamics GP. They can drill in and they can look at any one of their leases. They can see the lease details, and then they drill in one step beyond this, they can see the charges. They can see exactly what rent they're paying, what charges are there, and what that's going to look like going forward. Another section of the portal allows them to see, to print or download as PDF any outstanding AR or SOP documents. They can come in and they can see them. These documents can be created from the property management module or just standard Dynamics GP AR or SOP modules or documents. They can pay them in full by simply clicking the checkbox. They can put in a partial amount. When they click on the pay button down at the bottom, it goes out through the payment portal, and based on the setup, either through e-check or credit card, these invoices can be paid. Cash receipt created in Dynamics GP, your cash modules updated, your bank rec modules updated, and of course the invoice is marked as paid. Some of the other enhancements that we're working on, as I mentioned earlier, we do have that work order integration with GP Field Services. I can be in property management, create a work order, push it out to GP Field Services to do some job costing. Or I can start in Field Services and create a ticket. When I realize, hey, that ticket is actually attached to a property, I can add the property and push it back into property management. The next phase of that will have those charges. If you want to recover that work order charge from the tenant, push that charge back to the tenant as well. We've recently added some wizards to make the life of the user of property management that much easier. Creating a new lease or extending a lease, changing a unit. A tenant wants to move from one unit to another, or the tenant moves out. We've created wizards to help walk through all of this. Again, the reason we're on this call, ASC 842 support is coming up. We're working on that right now. So the creation of those right-of-use assets and the liabilities and the investments and the proper recognition of the revenue over the life of these leases, the support of capital, or as they will be known in 842, the direct finance or sales type leases, and of course the operating leases will be managed as well. We're making more enhancements to the portal. It's always getting better. We're adding some CAM enhancements. Additional CAM reconciliation parameters are being added for fiscal year, tenant fiscal year, base years, and caps. And then we're going to simplify that interface one step further, change the interface to refine it so that depending upon what your market space is, for example, if you're in the residential space, you don't need to see all those fields that have to do with commercial. If you're in the commercial, you need a little bit more. Retail needs a little bit more. So we're going to change the interface a little bit so that it makes sense to those that are actually using it. Again, a lot more information available through our website, or you can certainly contact us directly. So a quick review of what we looked at today. We did a review of ASC 842. We talked about what it is. How does it affect you, whether you're a lessee or a lessor? When does it take effect? What do I need to know to get ready? What are some of the things I need to look out for? We looked at some of the expert advice from some of those large accounting firms that tell us how to get ready for 842. And we talked about how we're going to handle 842 in Dynamics GP or Dynamics 365. Our options basically were Excel or obviously the ISV solution that we talked about, property management from binary stream software. So I'm going to open up to see if there's any questions here now. My contact information is right here on the screen. Certainly feel free to check out our website. It's just www.binarystream.com. There's online videos, there's documentation you can download. Send me an email if you want. I can even share with you some of the documentation I have, some of those accounting documents if you'd like to see those, or certainly feel free to give me a call, leave me a message as well. Okay, just looking at the questions really quick. Somebody's asking if they will be sending out copies of the slides. Absolutely. At the end of the call, we will be sending out, once the recording renders, we'll be sending out a copy of the recording and a copy of the slide deck as well. So certainly feel free to have a look through it. If you have any additional questions, be more than happy to get those answered. Okay, I'm not seeing any other questions come in, so I'll leave this with you folks. I strongly suggest getting your hands on ASC 842, read through it. As I say, Google some of those research documents from the accounting firms. Let me know. I can send them out to you. And good luck in your implementation of ASC 842. Thank you for your time today.